All right, good to go. Hello. All right, so this is, as Annalisa said, 2024 in review and 25 outlook, which Gina will also go deeply into 25 outlook. So you kind of know the dance routines if you've been on a few of these. I'm going to go through the market metrics, and we're going to start with a picture as of today's close of the S&P 500 index, which of course is the 500 largest corporations in the United States. This is a 1 year look back on the trajectory of the stock market. And it's quite fascinating to me that despite what we all, I'm sure, are feeling, which is, like a bit of deep uncertainty and concern about the way American government goes forward from here, it's clear that the stock market is pretty happy with this possibility of a Trump administration. And if we go back into the August, September time period, the market was unsure about whether Harris or Trump were going to prevail. But starting in this, if you see this right here in early September, the market sort of determined that Trump was likely to win the presidency and has since driven the market up. And of course, it's doing so because of two things. The market, first and foremost, is accountable to how much money are these 500 corporations making from a backward looking point of view, and how much money are they expected to earn in the coming year. So we call that the earnings out. So the earnings outlook for 2025 is quite strong. It was strong in 2023, in 2024, and it continues to show expanding earnings based on current data for 2025. And this is largely due to the chat GPT phenomenon, the expectation that as chat GPT permeates into small, medium, and large business, that businesses will operate more economically efficiently and generate more profit. So even though there's a lot of social turmoil, a lot of polarization, and big questions about how the federal government operates going forward, the stock market, which is different from the federal government, the stock market is feeling pretty enthusiastic about the technological disruption underway as relates to future profit expectations. My comment would be that you can't entirely silo social well-being, federal government well-being, and the stock market. It is all woven together to a certain degree. But you can see for the moment that the stock market is quite enthusiastic. And you'll notice that today we closed right slightly below all-time highs. And, I'm just going to guess a trend in motion is likely going to continue. It would not be surprising at all to see the market make new highs. And like that one-handed economist, I would also point out that this is a ceiling. We're right at a ceiling. And so the market will tell us in the coming days whether it has enough momentum, enough force to get through that ceiling and move into new highs, or whether we cut back. But I would just say the trend is up. That's the simple component. All right. Well, I've just pointed out that the trend is strong. I will also point out that the market has rarely been this highly valued. We are really paying a lot of money to be in this market. And the reason for that is because of the technological disruption from the chat GPT. It's no small thing. I mean, chat GPT, the potential to really enhance business operations is quite strong. The market is enthusiastic, but we've been here before. We've seen this kind of theater before. Markets get ahead of themselves. So Gina and I have to be very careful about, just not being mindful of valuation. And so our job is to rotate into value-oriented positions and not chase the high-value technology sector too aggressively. Uh, and we're faced with a situation that has never happened before. If we go to this red line and go back to September, when the Fed made its first interest rate cut, of a 0.5%. We dropped down right at the same time that the market sniffed out a Trump win. So what is interest is the Fed is on a path of cutting short-term interest rates, while the market is telling us that Trump's presidency is likely to be inflationary. If Trump's first round was any guide, he is not a deficit hawk. He likes to spend money and he loves to borrow and spend other people's money. So the bond market in the long-term interest rates, which is the 10-year interest rate of the blue line, what that's telling us is it's enforcing a bit of discipline on our market. It is saying we want to see material reductions in deficit spending before we're willing to drop interest rates. And that's going to be very difficult, as we've witnessed in the Doge process in the last 2 weeks. And the fact that going into 2025, the US Treasury is going to have to borrow roughly 30% more money than it did in 2024 because of this rising interest rate environment. I mean, next slide, please. Let's go back even to September on the 10-year government interest rate at the bottom there. It was around 3.6%. Today, we're at 4.49, 4.5%. In summer of 2021, the 10-year government bond was 0.53%. And for most of the 2010 to 2020 period, the 10-year government rate was 1.5 to 1.7%. Well, think of that. We were borrowing money like drunken sailors in that period of time at 1.5 to 1.7%. Today, we're rolling those very same bonds over for another 10-year period at 4.5%. Interest expense is ballooning. The U.S. government takes in $5 trillion a year, roughly. We spend $7 trillion a year, and of the $5 trillion income, we're now paying over $1 trillion a year in interest. That number is going to grow strongly unless we can get interest rates to come down. And this initial picture is hopeful, but we're not there yet. And what's interesting when you look at the sort of, the super tanker of Berkshire Hathaway, he's famous for buying low and selling high. And there's an old adage that's contrarian in nature that you buy your straw hats for sunshade in December. And Warren right now is not chasing the technology whiz-bang tools. He may underperform considerably because of that. He's preferring to raise a lot of cash on the idea that valuations are super high, everything goes in cycles, that he in the next year or two I think he's betting on the idea that he'll have an opportunity to buy up companies on the down cycle, but he's not chasing the big whiz-bang companies today. And interestingly enough, gold is at all-time highs. In fact, today, this slide is from a couple of days ago. You see the price of $2,928. Today, we closed at $2,957 an ounce. So $3,000 an ounce in gold. Who knows if we hit it or not, but it's very likely we will. And what this is telling you is just a shift in global perception. It used to be central banks kept all their reserves in this order: US dollar, Japanese yen, the euro, and gold. Now the mix worldwide is the US dollar, the Japanese yen, gold, and then the euro. So gold is taking a bigger and bigger role in bank reserves, and it's not surprising given the catfights around the world and the geopolitical tensions about who's going to control the next century, particularly the China-US tension, that central banks would put their reserves in something that has more lasting power than the paper currencies. And what's interesting is gold is making new highs against every currency on the planet, which just tells you that this floating exchange rate system that we've lived under since 1971 all currencies are sinking under the weight of deficit spending and debt. That's what gold is telling us. And the world has a debt problem. And we have to figure out, as painful as it will be, and we've seen it in Argentina under Milei. We're about to go through our own experience of it here. Uh, Somewhere along the way, we have to figure out in our governance system how to balance our income with our needs. Debt has a role to play, but not when we become overly dependent on it. Okay, so I'm going to turn it over to Gina now as she goes into the portfolio consequences.
And we're going to take a step back for a second. We're going to talk big picture about what the election, what Trump and Musk's actions are really, the impact that they're likely to have going forward. And then we're going to talk more about the portfolio. So I would just want to kind of step away from the stock market isolated and go more into the big picture, because last time we talked about the fact that there were two kind of competing interest groups around Trump. One was the Project 2025, much more nationalistic, Christian-based, uh, very small government, that kind of group. And then uh, the libertarians, pro business, kind of pro stock market, let's say, group. But in Musk, those two groups have really come together, and they've begun to implement the Project 2025 plan. About 2/3 of the executive orders that were recommended in Project 2025 have already been given by Trump. And so we do have kind of an outline of what the agenda is. Good, bad, ugly, whatever we want to call it, it's coming. And so what can we really expect, given we've got the roadmap a little bit? One of the big things that we should be expecting is increasing unemployment. For every government job that's eliminated, 2.3 private sector jobs are eliminated. So we're likely to see a very quickly rising unemployment rate. We also are potentially going to see a rise in inflation because we've got the lot of low-cost labor in the immigration, deportations, and in tariffs. We're already seeing a lot of retaliatory tariffs, retaliatory actions happening. The elimination of USAID is going to impact farmers in a huge way. A lot of that aid was actually purchasing from our own farmers to go, feed people abroad. And education is one of the areas that is likely to be hit quickly and aggressively. And the two areas that we're going to see hit more intensely is special education, which is federally funded. States that can pick up that baton are likely to do that, but states that are not able to fund those programs are probably going to have to eliminate a lot of them. And student loans, there's been a lot of talk of eliminating the forgiveness programs for public service work, for income-based repayments, those kinds of things. There's very likely lowering taxes for the wealthy and businesses, extending the tax cuts that Trump got in the first time, and also increasing some tax cuts for businesses. He has proposed eliminating taxes on Social Security, so that might happen, but he's also talked about increasing taxes on Social Security. So we're not sure what direction that would go. And an increase in earnings for business. Like Stuart said, the market is expecting increased earnings for businesses. The elimination of the regulating bodies like the EPA, OSHA, which is the safety and health organization that protects the health of workers, those types of programs being eliminated will save companies money. And so if you have a land project and you no longer have to go through the environmental protections prior to putting your building up, you'll be able to do it much more quickly. And so there's likely to be a big divergence. We saw this during COVID, where the actual real economy for human beings, living their lives is very, very different than the economic picture, the stock market. And that's part of what you're going to feel and hear in a disconnect. And what Stuart and I are doing with investments is we have to kind of pay attention to both things, because we don't want to overreact in one or another direction. And so at the individual level, the big message that we have for clients is stay diversified. Keep your options open on a personal level. Look at your life and to keep different directions available to you. But on an investment level, staying well diversified still while planning for inflation. So protecting some of your income and looking at the impact of inflation on that income. We're going to go into a little more detail about the Medicare, Medicaid, Social Security impacts down the little bit, so I won't get into that here. But the other thing at the individual level is to really look at your personal situation from the point of view of government is likely to be very dysfunctional in the years ahead. So things like, do you have your passport? Because it could take a very long time to get your passport. Do you have your legal documents in order? Do you have your social security card to prove your social security number? Your birth certificate, should you need it? If you've got a gender identity change, make sure you've got documents in order to keep that intact. Legal marriage, gay marriage is under attack already, and to get ancillary legal documents to protect your rights. If you've got a marriage that could be annulled abruptly, then look at other ways of legally binding your family together. And other kinds of family safety issues. If you want to immigrate to another country, or if you want, you have a friend or a family member who is moving here from another country, and trying to get those things in order right now before more breakdowns occur in the larger system. Because we know that 75,000 federal workers right now accepted the early retirement plan. And so those kinds of things are going to impact the flow of actual government functioning. So how does this impact our portfolios? First of all, the work that we did rebalancing portfolios a year and a half ago has proven itself out. We are on track with our benchmarks. So that's been very good to see. And we've really been keeping in touch with the economists that we've been working with, and keeping the asset allocation up to date. We've been holding the gold position, gold and silver. As it's going up right now, again, we're increasing it slightly so that we're going to keep the gains. We're increasing our cash positions, especially in any of our moderate portfolios or income-based portfolios. We're lowering the risk. And that's just because when you go into recessionary and if factors, high unemployment, those kinds of things, we aren't sure how the market's going to respond in the next few years. And so we want to be a little bit more cautious. We are adding some into international because international had been hit so hard against us stocks. And so that's a way for us to diversify a little bit more. And we're keeping the large company stocks that we had. We're not really reducing much in terms of that, because that's really where the earnings growth is expected to happen. We are keeping some renewables, and that is because regardless of what the politics are and what the rhetoric is, the demand for electricity is growing globally by leaps and bounds. AI uses a tremendous amount of energy. Companies are still trying to decarbonize. The EU requires carbon reporting. California still requires carbon reporting. So companies are not going to completely give up their carbon goals just because of the change in federal taxation and incentives and things like that. And so we're holding the positions that we have because we did reduce those positions. and we're rebalancing and using this downturn as an additional way to buy low. And so being a little bit disciplined in that. Social Security and Medicaid, like we said, fewer employees means that it's going to take longer to get benefits actually. So go online, check your records, make sure your records are complete. That means that they're going to have a list of all of your income as it's come in year by year and been reported. You want to make sure that's all accurate so that you're getting the accurate amount coming back to you. If there's problems, expect long delays in trying to get things worked out. So check in on that right away. They are expecting to reverse the drug price limits that were put into place Medicare. There has been some talk about Medicare Advantage being the only option when you sign up for Medicare, some higher costs. They even have talked about doing away with the pre-existing conditions kind of things for other healthcare. So some of those things are just being proposed, but the more likely ones, the drug price limits are likely to go away. And taxation of Social Security, like I said, that could go either way. So we're really not sure how Social Security taxation is going to go, but we are thinking Social Security will face some major changes. Musk has said that 50% of Social Security payments are fraudulent. That can't possibly be true, but it shows us those payments are targeted. And so if you are on the cusp, if you're 68 and you're waiting to age 70, I know if you've talked to me in the past few years, I've said, wait, don't give up that extra money. In this case, when they change Social Security benefits, often they keep the people in the system grandfathered in, and they change things for people that aren't yet taking benefits. And so if you're close, it might make sense in your situation, and call us if you want to talk it over, to take those benefits now versus later. And reviewing your income needs, looking at the next few years and seeing what do you need for income? Do you have it kind of in a more secure bucket? What do we need to do to make sure that your safety is in line? And then you're younger, utilizing health savings accounts, making sure that you're saving under your own name for your future health. I think counting on Medicare also to be there long term in the way that it has been, it's possible that that could be changed considerably. So looking at, do you need to reconsider long-term care insurance, annuities with long-term care benefits, those kinds of things. So when we talk about planning, there's kind of two tiers of planning. There's safety needs planning, and then there's aspirational planning. And what right now is a time to really do a safety check. Make sure all of your ducks in order. Part of that is your housing. And we're seeing, unrelated to the politics, well, in some ways, but we've got wildfires going on, hurricanes, flooding, and homeowners insurance getting harder and harder to keep on houses. There's an increase in individual underwriting happening on individual homes. And so if your house has any risk of flooding or any other sort of catastrophe, check in on your homeowner's policy and see where you stand. Is it time to look at making a shift in your housing situation? We are expecting that as unemployment rises, there's going to be a push to lower interest rates. That could bring mortgage rates down. That could bring housing prices up slightly from where we're at right now. And there could be a window of time here when it would be good to sell and move into a different housing situation if you're in one of those positions where you're at risk. And then I'm going to back off the bigger picture, what's going on in the world, and talk about what's going on as an individual. And Elisa brought some of the FTI, financial transitions work last time. We are going to give the financial transitions, the centered wealth, kind of emotional, how do we find our center? How do we keep our center? going through times like this. We're going to give it its own webinar space coming into the future. But one of the things that we want to talk about is how do you keep yourself regulated?